Hello and welcome back to another episode of the Bullish on Bitcoin show. I'm Alexei, co-founder of Bob, and with me today we have Sergej Kunz, co-founder of 1inch. If you're using DeFi, if you're trading in DeFi, there was no way that you have not seen, heard, or used 1inch over the past couple of years. 1inch has built one of the prolific, most well-known aggregators and places to essentially do DeFi trading on chain. Sergej, we always love to ask this question. How did you get into crypto? How did you end up building 1inch? What's the backstory?
Yeah, hi everyone. First of all, it's a pleasure to be here. So, how I came to crypto? It was actually 2011, I think, and like I did a little bit Litecoin mining on my MacBook. A colleague showed me about crypto, some topics. And actually, I didn't get the feeling that actually this is my space where I want to be and to want to build or like to participate. But in end of 2016, I have seen a video of a guy who built a mining rig for Ethereum, and I thought like, oh, that's interesting. And I built the first mining rig by myself, and I understood, okay, this is very interesting. So I started to increase my mining power. I think I had like 60 kilowatts per hour, and then I started to do security audits with my co-founder Anton for like it was like a YouTube show where we did live streams security audits of smart contracts, because like my background is software engineer and Anton as well, and we just did it for fun. It was really fun. Like a lot of people were watching us, and we did security audits over 8 hours, 10 hours at one piece. It was really fun. And then we started to participate in hackathons, traveling around the globe, and participating on these programmers competitions, and have built 1inch on one of these hackathons. That was kind of entry point to build 1inch itself. It was just an idea for what we came to on the hackathon, and just wanted to build it for ourselves, because like it was kind of difficult back in 2019 to find the best execution. You had to go to Uniswap, you had to go to Kyber, to Bancor, and then you had to compare the prices, and it's very annoying. And still today, who has the best execution of the DEXs? And I think like more and more DEXs are migrating right now into offering aggregation, even across other protocols, not just on their own protocols, like Uniswap is doing that right now with Uniswap X. And intent-based technology, what is actually based on Fusion, on our intent-based technology, what we invented in 2023.
So intents have been, I think the hottest topic in like cross-chain and like also same chain trading on chain, right? Essentially intents, abstract complexity for users, right? The promise was that, you just say what you want, and then you have solvers execute on your behalf. They compete for the best rates. You no longer have to kind of do this all yourself. How has this changed the landscape? Would you say that intent-based solving has significantly improved like DeFi trading overall, or has it moved us more to kind of essentially a market maker cartel in the background, where you have like a few big solvers competing for liquidity, but ultimately it kind of takes us more towards the TradFi model than the original kind of DEXs were? Where do you see? There's probably no like clear yes or no answer here, but what's your take? 1inch was one of the pioneers in this space.
There's clear answer from our point of view. So if you look at the traditional model where user do the transaction by himself, where maybe directly DEXs use, or maybe aggregation among different DEXs, then user take risks. So transaction can fail. So you as user, you will pay the failed transaction costs. So you can get a sandwich attack, like there are math, there are kind of attackers watching out for your transaction and bundle your transaction with own transactions to extract maximum acceptable price impact, what you have to set in any of the front ends when you swap. because this is the nature of DEX is that who first detect first, and the math bots extract value from the user. So these risks are you, and intent-based swaps or other interactions are like less with risks for the user. Risks for intent-based swaps on one edge are more on the solver side, on the professional market makers who compete between each other. So it's not like, it cannot be like a cartel in the terms that all the market makers need to speak with everyone and to align with everyone to specific conditions to maybe charge additional 50 bips. And first of all, they need to speak with our resolver, one each resolver who is independent and runs by themselves to ensure that no one is kind of cheating in terms of like that they hold and wait for settlement until specific profit. So our resolver is settling with the first $sign profit or even zero. Yeah. So intent-based moved all the risks of sandwich attacks and also failed transactions to the resolver. So user got better user experience. And here we go to more user-friendly environment compared with centralized services what we have, like centralized exchanges, for example, but in a manner that user don't need to trust the centralized entity, where user just announce an intent and the protocol ensures that the user gets what he expects. And back in 2023, no one took care about that. No one understood it, and it took very, very long to get the adoption. We had help of Uniswap, so they mentioned Fusion in the white paper when they have released their own Dutch auction-based intent-based protocol, what actually touched our own patent of 1 inch, what was granted recently. They help a little bit with adoption. So, and there right now more and more protocols are moving to the direction of intent-based protocols. So because it's kind of, it gives like seamless user experience. So the user don't need really to understand that they need to pay for the transaction. They just get executed. And we introduced the intent-based swaps also for cross-chain swaps, for the atomic cross-chain swaps that we have. I think we are the unique protocol who offer atomic cross-chain swaps by using intents. Everything else, based on my knowledge, is just intermediates, bridges, and huge delays. So recently, I tried to deposit in Robinhood something, and through the native Arbitrum bridge, and they offered me only, like, even though the native bridge, they offered me some service providers. So I had to use the service providers to move some assets to bootstrap our kind of to bootstrap our cross-chain resolver. So, and like it took long. It took like 20 minutes, and I didn't get any updates. What's happening? I was like a little bit in panic, like, oh, this amount of money is potentially lost due a centralized entity. So, and custody service. So, and yeah, we try to improve that. Yeah, intent-based, and users should have no risks. And all the professionals, like market makers, arbitrage traders, who participate in 1 inch network as solvers, they should take care about that. Yeah. So this is the way we try to adopt, and it's getting better and better right
now. So speaking about user experience, and you mentioned also a point about fairness and essential reliability. There's been a recent debate about fairness in AMMs, or specifically it started with prop AMMs on Solana, but then this issue also applies to solvers, to intent-based systems, to cross-chain swaps. 1 inch essentially, right? You have different solvers, right? They offer quotes to users and ultimately then execute, and you coordinate, and you essentially are the gatekeeper. You're essentially also ensuring that, well, that everything is fair. How do you see?
We are not. I'm sorry, but we are not. No, we have protocols. What ensures there's no intermediate. There's just the smart contract, the protocol what ensures that it's getting executed as expected. Yeah, and we are not gatekeeper. There's a protocol what is used not just in oneinch.com, not in one-inch wallet. The one-inch protocols are integrated almost everywhere. Even like we serve Coinbase, yeah, with our services. We have B2B business, what is kind of API business. We give them opportunity to use our API services. And then there's a protocol level. And this is on blockchain and written stone and cannot be changed. Yeah, so there's no administrator who can change the implementation or something. It's fully immutable. And the protocols ensures that they'll get what they expect.
Right. Okay. Well, I guess then, so there was this whole, I mean, back to the kind of fairness points. There was a debate around, prop AMMs and essentially providers, aggregators, quoting better than they can actually execute. And there's Enzo, one of the meta aggregators, right? They created a dashboard for this as well, where you can actually see, well, how often do different providers overquote? In fact, 1inch is currently #1 on that dashboard in terms of fairness, and yeah, because you guys don't overquote. But there's quite a few out there, well-known players that have been quoting better to win essentially flow against, for example, also 1inch in wallets, in meta aggregators, and other places where essentially you are one of the integrated providers. How do you see that market evolve? Because ultimately someone somewhere has to protect the user against essentially overquoting, right? Whether it's on the wallet side, whether it's on the meta aggregator, right? There are things like SwapKit, there are things like DeFi, but then it's kind of a weird situation right now, because if you, take for example, meta aggregators or aggregators that essentially also aggregate 1inch, but then they also aggregate other providers. If they check, right, like Enzo, for example, does for overquoting, and they only kind of report the ones that, reliably actually execute what they quote, then they're also at a disadvantage if there's another aggregator that is integrated into a wallet that does not do those checks. And then they surface providers which, quote you a couple of bips better just to win the flow. But then actually when they execute, it's not better than the rest. How do you see that developing right now and also in the future? Because this is something also we as a cross-chain sub provider have been observing in the Bitcoin space, where there's lots of competition among providers. There's a competition among aggregators to get into wallets. And many players essentially just try to give better quotes just to win the flow because, well, for a user, for a smaller swap, 10 bips, 20 bips, they don't notice it if it's one time. But it adds up over time. And for power users, it obviously becomes a huge issue because they're paying much more fees than they should be.
So I would like to fix the wording. So yes, we have a centralized service, what is a B2B service, where we do also KYB with the registered users in our business portal. And yes, we provide, based on our Pathfinder algorithm, is again patented as well in the US and some other countries, what gives the path, the route to exchange source token against the destination token for the best execution. And yes, there are sometimes issues in terms of our quoting, but from my point of view, it's not intentional by any of these aggregators. The overquoting comes very often through bugs in implementation of the liquidity sources, or potentially market makers what are integrated in the flow, and they provide quotes what they sometimes cannot fulfill or don't want to fulfill. So you can look on the market makers who are behind all the DEX volumes, who get from the aggregators some DEX volumes. These are professional market makers or arbitrage traders who need to protect themselves as well. And there are a lot of people who try to abuse them. So I'm like, we were the first aggregator. In general, we were the first aggregator for DEXs, but we were also the first aggregator who introduced the market makers in the whole volumes flow. and they got abused with a lot of creative attacks. Like some people just, like some other market makers, try to get an order from another market maker to hedge all position somewhere. Yeah. So it was funny to see how they fight against each other and so on. Nowadays, they have really strict rules. So if when they need to provide order, they do proper scanning of your wallet. And if they understand that you are kind of try to make a lot of orders, or you ask a lot of orders, but you don't you don't execute them, they just block you. Yeah. So, and it can be that there's a delay between that you get the nice quote and then the reality where the market maker actually rejects you with like, I don't give you the order. So, and these comparison dashboards, also Meta Matcha, for example, it's not the super reality what the user would get, because like when you sit on such dashboard, these dashboards with your connected wallet always try to get new orders from market maker. These are RFQ orders that are included then in the whole aggregated swap. The more you sit there, the less chance you get to get real quote what you would get as a normal user. Yeah, so it's a kind of a gap, and we didn't find any solution for that right now until now with the market makers. But I'm looking into it. Anyway, a lot of users are moving to intent-based swaps. So on 1inch already, we have more intent-based swaps than the classic execution at 1inch.com at least. So we have, of course, we have a lot of integration like Coinbase, MetaMask, and some other who are using the classic approach and expose own users to the math risks and failed transaction risks. Yeah. In terms of like also other providers of like overquoting, I think it's not intentional, because anyway, like MetaMask and also MetaMatcha, they do estimation of the transaction. Yeah, so we give the prepared transaction, we give the call data, like what needs to be executed, the transaction data, and the other as well. And then MetaMask, for example, do proper estimation on chain, and then choose only the best what would win. Yeah, and again here there are sometimes gaps in terms of delay of the data, because like on Ethereum you have every 12 seconds a new block, and it can be that you got the quote from one block, but execution will happen in the next 2, 3, 4, 5 blocks, and there situation can change, because there would be maybe some other users who already exchanged on this liquidity and the price changed, and the return amount is then below the expected return amount of the user, and then kind of the transaction even would fail. Yeah, so it's kind of highly complicated thing from up on for the user itself. So at the end, user should just have intents, and the execution should be on a professional market maker and arbitrage trader side.
I mean, that all makes sense. But then I guess, say we have, there's like, I mean, say I'm a competitor of 1inch, so I also provide intent-based swaps.
We have no competitors.
Okay.
We have only partners in DeFi, and we are building all together DeFi and Web3 space.
Well, fair enough, but at the end of the day, right? You are competing for flow, right? I can route my trade through 1inch. I can route it through 0x. I can route it through something else, right? They can go to another cross-user protocol, even if they're different designs and trade-offs. I could do that, right?
I would say we are closing the gaps what are not closed with the other providers. So if 0x like share with us liquidity source, the volume, then actually we fulfill something what they don't fulfill. And the same with them. If they get some volume and we don't get it, they do something better than we do. Yeah. And if you look into market distribution, it becomes like you see the picture on the charts that it's actually very well distributed. Yeah, so they all provide best execution altogether and improve the other kind of
Yeah.
But continue.
But perhaps, okay, I mean, perhaps it's different on the same chain side, but at least also for cross-chain, right? We know, and like also for like same chain with prop AMMs, where you have essentially like one operator quoting, and like we know that there's cases, and it's not too difficult for me to essentially, you know, as a competitor or somebody who is quoting and, you know, like who is competing for volume, to give better quotes, even if I don't fulfill them. And this is happening, right? Like this does happen, and whether
but
it's
no one is looking into it in the quotes, yeah, nowadays. So MetaMask is looking into real on-chain execution, like estimation, simulation data.
Yeah. So that is, and now I think we're getting, I think, perhaps to the point where it works well for same chain because you can simulate on Ethereum, right? And you can simulate what the result will be. But for cross chain, that actually doesn't work, right? If I'm swapping between two chains, Bitcoin, Solana, Ethereum, Tron, right? Here you can't really simulate. So there is currently no way to actually track and verify whether quotes are honest. And it's ultimately, as you say, like up to MetaMask or a ledger to implement that.
You don't need to do it for the cross-chain swap. You need just to have Dutch auction, for example, what we do, find the current market price.
Right. So because the different market, but how do you, so I could quote one thing on Ethereum, right? And I tell you, I'm going to give you like you know, maximum, like I'll give you like a spread of like 10 bips, but actually I deliver you at a spread of 30 bips cross chain. That can happen, right?
Now look, in our cross chain, atomic cross chain swaps by using intents, it works like in the manner that you as user, you announce an intent that you would like to sell one Ethereum against Solana coin. So, and this Ethereum goes into a Dutch auction, and they start on the spot price going to the market rate. So we know the price of Ethereum, we know the price of Solana. So and then Dutch auction starts, and then based on the market conditions, it can be that the user get actually even more than he expected, more than the market rate if there are some price movements between Solana and Ethereum. So, and then as soon as someone take the order from the user, even like partial fill it, it's locked. It's locked, it's fixed, it's in escrow, and we are using custom lock contracts to ensure that it's fully atomically. And the market maker needs to fulfill. Otherwise, he get kind of it's not like slashing. It's like when they start to settle, they deposit some bounty. Yeah, and if the market maker stop to settle because it's not profitable anymore for them, someone will continue, or the user get the assets back. Yeah.
So essentially, and how do you, and again, perhaps we're going a bit too deep into the design here, but just to kind of close the loop. So you essentially, in 1inch, you kind of hence enforce that, you know, but that the rates are then fixed. So once they're quoted, I as a user get the fixed rate, or is there a certain slippage tolerance that is permitted?
Yeah. Here we work with Dutch auction. Yeah. So we provide to the user the current market rates. So the user can create by himself the order, announce the order, and then Dutch auction begins. And the Dutch auction starts from spot price to the market rate, and to the mean return, to maximal acceptable price impact. And somewhere here is the market price. So, and somewhere here, market makers take the order, and then the rate is fixed, and this is what the user will get. So kind of you need to see it as a user use just the market opportunity possibilities. So by announcing intent and having Dutch auction, this intent will reach a specific price what is profitable to take for someone to arbitrage it. And that's it. It's kind of very simple. No technical implementation in terms of like how we bridge it, how we put it in the bridge, how we unlock or lock between the networks. it's very, very simple. By using escrows, hash-time lock contracts, and providing market opportunity and profit opportunity for market makers. And the market makers and arbitrage traders, they settle even with a couple of $cents profit.
Okay. Well, I guess then, I guess like more cross-chain sub-providers should look at the one-inch design, and I guess then the users get much better execution, much more reliable execution when they use your model versus some of the, I guess,
safe,
simpler...
non-custody, and atomic. Yeah,
right.
These are our values. Non-custody. Everything what we build is non-custody. Everything is atomic. Yeah, and secure.
Right. Well, I guess we can move on to the next topic. Just to like clarify, the thing I was getting at is that in cross-chain swaps, what we have been monitoring and seeing is that there are some providers that essentially compete against other cross-chain providers in aggregators for cross-chain atomic swaps, but they have different designs. Most of them are way less advanced and have much simpler designs than 1inch and don't have these protections for the user. But then in a wallet like Ledger, for example, or MetaMask or Coinbase, right? Users, like either the manually or the automatic algorithms, right? If they don't check the quote versus settlement difference, if there is one, the simpler algorithms, what they actually do is they just go for the best quote. The thing is that if 1inch actually enforces that the quotes actually, get delivered as they're quoted, that's very good. Some providers don't. And then the question I was getting at is like, where do you see the responsibility of actually making sure that providers like 1inch, there's Near, there's Chainflip, there's ThorChain, right? There's other cross-chain sub-providers in the space. And some of them do have like essentially quite consistent quotes and settlement, which kind of, you don't really see major slippage. Others have consistently settling with like 20, 30 bips worse. And that is, to be fair, like that's something where we have like seen data from these cross-chain settlements. We've been running this ourselves because we find it quite interesting to see like, okay, why do certain players always settle worse? Where do you see the responsibility, right? If it's not, like with 1inch, okay, you have a very good setup, but your competitors might be cheating. And do you see this responsibility on the wallets to actually, check this? Or do you not see this, or do you see this more on the aggregators? Where do you think, or is it something where essentially fixed rates will be taking over in the near future? Because we've seen a few protocols essentially move away from dynamic pricing to essentially fixed rate pricing, where the user says, I want $1,000 worth of Bitcoin, you get told what you send, and that's it, it's locked in. And essentially, their market maker, the solver, takes on the price risk of like the market's moving during settlement, but then there's a 50-50 chance that they gain or lose, but essentially the user just knows exactly what they get. So we've seen more of like fixed rates coming in the market. Where do you see this heading? And I get that's the last question on this topic, but where do you see this heading in the next months and years? Do you see dynamic quoting going away and essentially everybody's switching to fixed because of like this overquoting issue? Or do you not think really that this is going to change much?
So first of all, once again, I would like to fix the wording. We don't ensure any settlement at 1inch. We have protocols. What ensures that kind of? Right? When user use the smart contract, what is written kind of in stone, it's not changeable.
Well, yeah, of course, like by
kind of
the contracts.
There's no custody, no centralized entity what fix the price or something. Again, here we just provide price informations, and the user create the order, and the settlement is done through market makers as soon as profitable for them. So we met, like the user met the market conditions by using our tech smart contracts. So in terms of what wallets should do to avoid this overquoting and users losing some funds, they should stop to integrate custody providers. There are custody providers. You get the swap from like Ethereum to L2 in one block, yeah. But you need to give away your funds to a custody market maker who even highly potentially need the dealer broker license, and most of them they don't have it. What I know. So, and then you need to hope that you will get it on the destination chain. If you don't get it, you need to go to this custody provider, centralized service, and ask them to refund you. Yeah. So, first of all, wallets should stop to integrate that provider from my point of view, to not bring like additional risks to the user. So, and second, if the wallets like MetaMask integrate service what aggregates bridges, yeah, there are no other ways. Like kind of, they need to work with higher price impacts. Otherwise, the money will stuck in somewhere in the bridge. So like it can be that you bridge, it takes time, and then you need and out of the bridge of the other chain, it can be that the price already changed, and then they would stack. That's why they work with higher price impact. Even like up to 5% sometimes, depends, yeah. So just to avoid like that the assets got stuck, and that's why they got really bad execution. But if you have intent-based, like 1inch, announcement of 1 Ethereum against Solana, then the Dutch auction starts on the source chain and meet the market conditions. Someone settle it because it's profitable for them. And then there's atomic flow with escrow contracts and sharing of secret that the user verifies first that on the destination chain he got really the funds on the escrow, then the secret shared with the market maker, and the market maker has to fulfill the full cycle. So user got the funds on the destination chain on the wallet. So at the end, under the hood, user has just one interaction and not even a transaction, just a small announcement of intent by small signature from the wallet. I want to exchange Ethereum to Solana, and you get it in the fastest time what is possible by taking into account all the reorganizations of the blockchains. And this is how it should be. And to get out of this user losing funds, just use the right text and use 1inch.
Okay, fair enough. We kind of so moving on to the next topic, and that's something that's quite recent. So you guys started as an aggregator, and since then you've launched your own wallet. You've been adding more and more products and features, and the most recent one is Aqua, which I understand is essentially an improved way to provide liquidity into DEXs and essentially on-chain trading. If you had to explain it to someone in like 1 or 2 sentences, for someone who is familiar with DeFi but hasn't heard of Aqua before, how would you explain that in like 1 or 2 sentences?
Okay. So very important to understand for liquidity providers, when you put liquidity into AMM, you put your funds into isolated smart contract, into smart contract custody, so you don't own the assets anymore, so they are in a smart contract. These assets are isolated and are idling to 85% based on our research together, what we did with Dune.com. We had a really nice blog post about that. So the assets in the traditional AMMs are idling to, in average, like around 85% of liquidity sits idle. It's not working, not participating in generating fees. If you look on Aqua, this is actually not a traditional AMM or something like that. It's not even a helper for providing liquidity to traditional AMMs. This is just a framework, a protocol, what allows you to create strategies, trading strategies on your wallet. It means the assets stays in your wallet. You have full control over the assets. You can even use the utility of the tokens. For example, you have Uni token, you would like to participate in the Uniswap governance, you can do it because the token is on your wallet. And then you can reuse the same liquidity for multiple pairs. You have 10,000 USDC. You can reuse this 10,000 USDC among Ethereum, WBTC, CBBTC, and USDT. And even between these pairs, WBTC, CBBTC, Ethereum, and USDT, you can create additional positions and a specific price range, yeah, and own fees. People who provide liquidity into IMMs, traditional IMMs, they get diluted with the other participants. And based on my research, you get much less than 1 bips from the liquidity, much less. And in our case, you get the whole fee what you set. And the fees, of course, should be set by taking into account the market data. That's why we introduce also our AI MCP. We have also support of web MCP as well. This is a new thing coming for the web browsers. So people can do proper research and asking, for example, Dune MCP for, hey, I want the last 30 days data, and your AI agent, like Claude, for example, or ChatGPT can just tell you, okay, if you want to provide 10,000 USDC as liquidity in Aqua, you need to set this price range, you need to choose these fees, yeah, to get this volume, what is right now flowing through DEXs. Yeah, and this is something what unlocks a huge amount of opportunities. So compared to the traditional MM, your liquidity gets reused, more utilized, and more utilized liquidity means it can handle much more volume, and you can charge much more fees. Yeah, we built a backtest as well, so you can go to oneinch.com/aqua/learn, and there you can find a backtest scenario compared with Uniswap pools.
So essentially, if I want to provide liquidity into DEXs, I'm much better off using Aqua because it allows me to optimize and essentially better utilize my liquidity because it's not locked in one pool, but it will get used in different pools based on whatever strategy I set and in the ranges where it's actually needed. And of course, like there's been things where they, automatically adjust the range just for like one pool, but this seems much more advanced because it will allow me to LP into different DEXs on different pairs if I provide liquidity in USDC. So I mean, I can provide single-sided liquidity in USDC, and it will basically then optimize where it is being deployed.
No.
Okay.
I'm very, very sorry. I'm maybe a bad explainer. I'm working on that to pitch Aqua. So the thing is, it's not a helper tool to provide liquidity into different DEXs. This is DEX replacement. This is protocol would replace all DEXs out there. And what you do is actually like a setting limit order, what has advanced strategy. And this advanced strategy can be concentrated liquidity. It could be full range liquidity. It could be packed liquidity like in Curve that you have a formula between two assets. And you can also provide one-side liquidity. And this everything happens on your wallet. So your wallet becomes a DEX. That's the thing.
Right. So I think that was the missing piece here. So then the trading, but the liquidity is used. So who uses this liquidity when they're trading? Is that people who trade?
One-inch resolvers. One-inch resolvers, one-inch market makers who pass our KYB and compliance check. So we ensure that they are clean guys, like market makers. And they have access to your liquidity. And what they do normally, they arbitrage and merge the fusion, one-inch fusion, one-inch 10 by swap flow volume with Aqua. They are market makers who are also settling on Uniswap X and CalSwap. So the volume from CalSwap and Uniswap gets settled on Aqua as well. And the arbitrage traders who arbitrage Aqua with traditional DEX pools as well through own wallets.
Right. Okay. Now it makes sense. You mentioned this essentially it helps me optimize LPing, and I can essentially now easier participate in the trading volume that happens on OneInch as a user essentially.
Yeah. You as a user, you can make your money, make more money. By providing into hardest token pairs where right now volume is flowing. Right now, if you look into Robinhood, for example, there are some like meme coins, there are also RWAs. And if you look into RWAs are moving not together with Bitcoin and Ethereum. When Bitcoin and Ethereum goes up, like everything like goes up together with them. And then when it goes down, then everything dumps much more than the Ethereum and Bitcoin. So, and the movement is like always this, always together. But RWAs are different, RWAs are moving like that and completely independent to each other, and to stable, to USD, and also to Ethereum, to Bitcoin, or to whatever else. So, and by providing to such pairs, you can create a position NVIDIA to Apple stock. We can create Apple to SpaceX, SpaceX to NVIDIA, yeah, and NVIDIA to GameStop, and then you can add some stable coins, and then you have a graph. We have a really nice visualization at oneinch.com/aqua. When you create the position, there's a small icon, like map icon. You can click to it, and you get 3D visualization in the browser. So you can look into how it looks like. Yeah, normally we have two visualizations. One is like molecule visualization. The other is kind of a map visualization. And then when you look on the molecules, you have like every ball is kind of the token, and there's a pipe between the balls is the position you have. So, and then if you look on that, then it becomes a very complex construct. Yeah, and this construct can handle different kinds of volumes. Yeah, and in terms of like APY, you get higher APY because the utilization, again here not financial advice, the utilization of the liquidity is much higher than isolated one stupid pair in one Uniswap pool.
Okay. One on the Aqua docs, you have something about automating and agentic liquidity. Obviously, if there's a way for me to make more money and supply liquidity, this is something if I'm using agents to optimize, my yields on stables and so on, that will probably be discovered. How important do you see, agentic trading for Aqua, but also general like 1inch products overall? Obviously you have support for it, so I'm sure that you guys have had some thoughts about, what will happen in the near future, where will agentic trading go? What's your take? Do you see agentic trading? I mean, right now it's still quite early, right? I think a lot of people are interested in it. A lot of people are looking into it, right? Robinhood has now agentic trading. MoonPay launched a product, Coinbase has agents. So I think every big exchange has been launching agentic trading frameworks. But it's still quite early, right? Everybody's now talking about, well, here's a wallet that is isolated. So if your agent does something weird, only a small part of your funds gets lost. Where do you see this going in the next year, 2 years, 3 years? And how does this impact your roadmap at 1inch?
Yeah, the next billion users will be agents working for own operators to perform things much efficient, much better. So already today, it's not something what is not yet possible. It's already possible at 1inch that you just add in Cursor, for example, or in Claude or in ChatGPT, you add 1inch MCP, and then you can even connect your wallet via Wallet Connect, and then you can let your agent, maybe Fable 5 or Opus 5, to manage your liquidity positions, and you can also trade as well. Yeah, so everything is possible already by using our 1inch MCP. What is very well possible is that your agent is analyzing the volumes by using Dune MCP, getting the real on-chain data, analyzing the data, and adapting your positions by taking into account of your impairment loss and the wallet balances as well. So it's already today possible, and you can already now open your Claude application or Cursor, for example, and just add the MCPs you need. This is Dune, and this is 1inch. Yeah, and then then you need to connect to Wallet Connect, and then you can already work. One more thing, what we added with the Aqua release, we call it sub wallets. So at 1inch, when you connect 1inch.com, you connect your wallet, you can create a Gnosis safe multi-sig with 1 of 1. You can make like 1 of 2, for example, and deposit some funds in this multi-sig. You can use it as normal wallet in 1inch.com, what I think no one did before. So you can just switch between your sub wallets and risk appetite investments. And you can even give the wallet of your agent access to this multi-sig to do something. And of course, you can also give them opportunity to create the transactions so you can verify them and confirm or decline if you want. So we have already a flow and tools what gives you the opportunity already to do agentic trading, and agentic liquidity provisioning, to generate most out of your money.
You mentioned something at the end there, which is already my next question, verifying. I think one of the big constraints is for me, and we've been playing around with agentic trading quite a bit. I find it, I fully agree. I think the next billion users on chain will be agents that are probably controlled by not a billion independent users. Everybody have like a dozen agents working for them. I mean, I think, that's the dream. Let the agent trade for you. Let it, access information in real time. Even at 3 a.m. when I'm sleeping, it can rebalance. It can take profit. It's not emotional. It doesn't care if I'm a Bitcoin maxi or not. It will take profit if it's told to take profit at a certain limit. I think it's, I think this is where it's going. And, I mean, Robinhood, right? They were pitching their agent rollout as now finally the normie trader has a chance to take on Wall Street. I mean, obviously, Wall Street has their own agents and they're definitely optimizing. So I think what it does, it levels a playing field with access to real-time information and making faster decisions of when to make trades. One of the biggest limitations, I think, today is trust. Agents hallucinate, models hallucinate, right? We've all been there, right? Context gets compacted. The thing kind of forgets what you initially told it and it starts doing random stuff. You start a strategy, say you want to trade some perps. You tell it, well, stay within like 2x leverage, but I want to make some money, make me some money. And the first thing it does, it goes up to 20x leverage, right? You mentioned that you already you have sub accounts, right? So I can essentially then also verify transactions that the agent is doing, yes. Which I think works quite well right now. And we've seen this also like on Kraken, on Coinbase, right? Like this flow, just like we're used to it from Claude code, right? You basically need to authorize certain actions. But I think the promise of agentic trading is in full automation, right? Autopilot mode. Just go optimize the strategy, learn, and run it for me. How do you think about trust and ensuring what I would call guardrails for agents? Like, do you see, how do you see this evolving in the future? Do you think we will see frameworks where people just, can define guardrails? Do you see this more on the wallets, on the trading venue? Who basically will help protect the users from their own agent going kind of nuts or getting prompt injected or convinced to do some random things? Because I think for me, and I think, if you like look around online, right? Like, I think that's one of the main things holding back really mass adoption of agentic trading is I want to know that this thing is not just going to change its mind at 3 a.m. in the night and just do something random.
Yeah, I don't think so that this problem exists anymore, that they hallucinate and do some weird stuff. If you're using Fable 5 or Opus 5 at least, I think there's nothing else better than Fable 5 and Opus 5. So, and what we use at 1inch is quality gates. Quality gates for the development. So just like if you look on the Aqua release, we created 2,000 Jira tickets and we shipped them, and we had like around 1,000 pull requests in GitHub for the repository to ship Aqua. So, and it was only possible because we have a great partner, and this is Cursor. In Cursor, you have automations. In Cursor, you have Cursor Cloud agents, what helps you to run virtual machines isolated from your machine and perform some actions what you need. What right now a little bit missing at Cursor, what I miss personally are proper workflows. And but in general, you can build your own workflows. You can use the hooks. It can be Claude Code. It can be Cursor or whatever else. You can use skills, and you should use skills. And I can imagine you can easily already right now build a nice workflow. For example, analyze my current liquidity in my wallet by using 1inch API. Get Dune data for the last 30 days. Make like technical analysis of the volumes and price movements. Predict the trend. And rebalance my positions so I make for the next, 1 week, the maximal profit. So, and then the agent will just give you some opportunities. You need to close all your 5 positions, and then you need to create 10 more positions. Yeah, and specific price range with specific fee, and specific pairs, and specific amount of liquidity what you need to provision through Aqua. And then you have a list of these positions. Then you run like agents who verify themselves, like Fable 5 verifies themselves by using a specific skill, and they get the context. You can do it actually very well in Cursor, because in Cursor, one agent can call another agent and start another agent and verify the other agent. So you can have a flow of agents calling each other, and then they just verify what comes in one of the positions, and they need then to analyze. They need to go again to Dune, get the data, need to look on the position itself, need to even maybe simulate by using the data, and then if the quality gate says okay, it goes and deploy. So this is how it works today already, I could vibe code it very fast for you in the next 10 minutes.
No, I think it makes sense. I think if there is, obviously you have to with agents, there's essentially things that are non-deterministic, right? And then what you actually want for trading decisions is determinism. You want that certain blocks are deterministic, be it certain skills, be it certain building blocks, right?
Quality gates with skills. That's enough.
This is for power users, right? So this and I think this is perhaps where the question, going back to who's going to adopt and how will adoption look like. This is something for essentially people who write their own code, who write the agents.
Are you sure? Today you can vibe code, right? Well, everyone can vibe code.
I can vibe code because I have an engineering background and it speeds me up. You can vibe code, but someone who who has no computer science background but just wants trading.
My nephew, 13 years old, is doing vibe coding. I gave them a subscription for Cursor. So this guy is vibe coding like crypto monitoring websites with news and whatever else. Just like everyone needs know how to ask something. Yeah.
So your assumption is that ultimately the majority of people will know how to vibe code and hence will be able to implement the quality gates. Essentially, basically, the human input when designing these trading agents will be sufficient to prevent them from hallucinating. Is that kind of your assumption going forward?
I didn't see any hallucinations since Opus 4.6, or maybe even before. So Fable 5 or Opus 5 is the toughest model, but actually needs just a wish, a wish and intent.
And then it compacts it. Well, you can run out of context, right? And then it starts compacting, and then it becomes a bit more stupid, right?
Actually, with Cursor, it works very well. Yeah. So I don't know. I didn't code very long time already with Claude Code and ChatGPT Codex, but Cursor is doing it very well. They summarize the context, and then it's free again. And the model feels very, very, very well. Sometimes, normally, I try, of course, to have a lot of different agents for each topic, one. And then after 1 hour of work, it dies, and then it's good. But then I finish and check for the job, for the task. But sometimes I have over multiple days, one agent, what verifies something and verifies and trigger other Cursor agents.
Yeah.
So and it works very well. So. Yeah.
Okay. I mean, our experience has been a bit different, where you essentially, if you have a strategy, essentially what you want is essentially this: you want to have an agent that continuously runs over days, weeks, essentially, to run your trading strategy.
Wait a sec. I would say no. You need just automation. You need just Cursor, the agent window, not the Cursor IDE, you don't need it. You just install Cursor application, and then you open the agent window. In the open window, in the left top corner, you have automations. You click to these automations, and then you create automation what has memory and some access to Slack, for example, can even inform you. So, and even can ask you for permissions as well, and wait until you write back via Slack. So, and these automations runs every day or maybe every 6 hours, and then it just do the job, and then it's done. Yeah, it's like cron job. So, and this is the thing, what like the people need to understand, that you have such tools and they need just to use it. Yeah, and that's it. It's not magic something. No magic spells here.
I still think, while this all works, right? I still think that for the normie user, this is going to be too complex, right? People who are being targeted by a Robinhood, by essentially MoonPay agents, by Coinbase agents. I don't think they want to build their own agents. They want to pick an agent, they want to talk to it, say, hey, I have a strategy, or
it's not building on agent. It's not building on agent, what I explained right now. It's using a tool like Cursor, what has automation out of box. It's like just only cron jobs. It executes something based on crons, or conditions. So, and it's not on agent, it's just running a task by the best model you can get, with quality checks, quality gates, to ensure that you will not lose funds. You have different checks, with skills. And then nothing can go wrong. And I'm pretty sure everyone can do it by themselves. Just wish it. Write it down. I want to have an automated strategy. That's it. And it will do.
I think, I hope, it would be great if everybody could do that. I do think that at least for now, this is going to be too complex for most people. Because again, we're talking about, using this and coding with agents and like automating flows. Right now, the amount of people who are doing this are like a minority, right? It's still very new and people should be doing it. But I am too here. I tend to err. It's similar with DeFi, right? Like, now DeFi is getting adoption because it's being abstracted, simplified, right? People don't even know they're using DeFi. And I think the same will have to happen with agentic trading and flows, right? I just talked to my, assistant, agent, whatever you want to call that. And it should actually do this for me. It should then write exactly this type of automation flow. It should pick this, it should basically take deterministic blocks and essentially execute them in a certain order with certain parameters, without ideally hallucinating along the way.
I'm a friend of a different approach. I'm a friend of having it under control. And I'm a friend of having AI agent who execute what I am asking him. Like not AI agent, like AI model, even like AI model is doing what I wish. Yeah. So it's different to what you described actually, because like what you described is actually something like OpenClaw, what runs on your Mac Mini and do a lot of weird stuff. And I tried it. Right? It's I played with that. I built my own. I call it Cortex. So and I actually shut it down because I have my automations, and my automations I have under my control. Yeah. So and if I want to do something or do research, for example, what of all the 0x, Valora, Swap, and other providers getting what volumes they get, NVIDIA and get, and why, I just start a new Cursor Cloud agent, would do deep research by using different MCPs and APIs to discover why is that. Yeah, and I have it under control. And when it's done, it's done. It stops. So it's not doing any weird stuff, not like looking into your emails and think maybe to delete everything. So so it has clear goal and also clear skills. Yeah. So and from my feeling, also the software engineering, software development, and product delivery needs to change how it's approached right now. Like you need just helpers. I call it Agent Armada, who execute what you are asking for and nothing else.
Yeah, I agree. And Jeff, I find myself personally also more in that camp that I want to have the control. But then at the same time, there are certain things that, and I think this is, the promise of trading, right? Giving the AI money and go find the best strategy. And I don't want to spend too much time on this as well. And to be fair, for me, I actually, and for me, I envision it to be a mix. For things that where I know what I exactly want to do, I'll automate and I want to be in control. But I would put some, at least this is personal piece, this is not financial advice. If you give money to your agent, there's a high chance it's going to do something weird and lose it if you're not really in control. But I would just go and go and like find the best deal opportunities for me within these constraints. Like I have my risk preference, go do it. And I just, put some play money on it, because for me, this is the same thing as like, just buying certain stocks or like doing some risky trades where I'm doing it with incomplete information. I'm not actually sure if this is the right thing. It's more like, oh yeah, I think, let's take a part of my portfolio for high risk investments. I could do this myself and like really spend a lot of time and like kind of, do the research and click. And I do think like I personally, the more time I spend with this, I find that for a small portion, I prefer just to go and like give it some money and go do it. But I think these are two very different workflows, because I agree, like for managing larger amounts, you want to be in control. But Sergej, we kind of nerded out here a bit on the agent side. I went a bit off track. We are already almost at the end of the show. We didn't talk much about Bitcoin. So I'm going to ask you one mandatory Bitcoin question, given that this is the Bullish and Bitcoin show. When Bitcoin on 1inch? Because 1inch supports so many assets, but not yet Bitcoin. Is Bitcoin on your roadmap? But native BTC. So
we have WBTC, we have CBBTC, and so on. Native. We have a prototype. We didn't release it yet. Cross-chain swap to Bitcoin from Bitcoin works natively. Not yet released. We will potentially address it next year. Right now, like I didn't see huge demand in terms of like people are okay with CBBTC and WBTC and similar Kraken BTC, for example. They're good enough, kind of. Of course, it's kind of WBTC. It's a set of people or companies who have like custody over of the real Bitcoins. And I fully agree. We need native Bitcoin cross-chain swaps, and we will do that. And we will do it for sure, because the original idea of atomic cross-chain swaps came from a guy on Bitcoin Talk forum who introduced
in 2012.
The idea with the 2012, the idea for HTML contracts. So it's a must for us to deliver it. But I think we are busy this year with adopting of Aqua. We have more strategies. We have some more things in the pipeline to release this year. And then next year we can address Bitcoin for sure.
All right, cool. Sergej, thank you so much for joining us. We wish you all the best with Aqua growth and further launches. And we, of course, hope to see Bitcoin support soon. And with that, we're at the end of our show. Thank you so much for listening in. We'll be back in 2 weeks with our next guest. So stay tuned. Follow Build on Bob. Build on Bob on Twitter. Follow Sergej. Follow 1inch. And see you next time.
Thank you. It was a pleasure.